Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the Australian dollar whipsawed and slipped back into bearish territory as it breaks beneath the 60-day moving average, but that being said, still clings to the level around 62.80. Meanwhile, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, fell to 102.90, its lowest since October 2024. Investors grew wary as higher import costs threatened to fuel inflation and delay the Fed's next rate cut. Earlier today, Trump announced a 10% minimum tariff on most countries, with 20% on EU imports, 26% on Japan, and 34% on China, escalating trade tensions. Trump said it's our declaration of independence. We will establish a minimum baseline tariff of 10%. That all being said, focus now shifts to this Friday's March non-farm payrolls report and the Fed Chairman Jerome Powell's speech, which could give some insight into the US economy and interest rate decision in terms of a possible cut, with traders still anticipating a move down 2 or 3 cuts, that is, for 2025. However, tariff-induced inflationary pressures have complicated the outlook, hence why it may be 2 or 3, or still a question mark. So looking to the technicals, the RSI still supports a possible rebound, giving back the whipsaw price action, and a positive candle looks towards the region of 63.15. I feel above there, along with that, above the 60-day moving average, could see a move on towards 64 cents. A very strong rally when it comes to euro. As I mentioned, the dollar index plummeted to 102.90 and now puts the market on course to 110, with any pullback likely to be shallow. Dollar yen crushes the key level of 148.4560 and now opens the weekly outlook to a potential target of 144 and reassess from there. Sterling also moving further away from the trend line and now looks towards 131 as a possible target and reassess if the level has been achieved. When we turn to commodities, spot gold surged to another record high of 3,167 and still keeps its momentum intact as the strength of the trend remains very firm. In view of how the market looks, the call is still towards 3,200, which could even see it aim further to 3,500 and reassess. Wrapping up with oil, the market reverses from its call of 71.5, which was reached, and gaps down and now puts the topside extension called to 73.5 on hold. In light of how the breakdown is occurring, we could see a move now towards 67, 60.70 before any reversal and look back towards the call of 73.5. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoyed a great start to the day.